Hey guys, hey YouTube family, welcome back to another video. And in this video, I'll be talking about the importance of understanding technical analysis and being able to read charts and chart patterns and things of that nature. Okay, especially in the time that we're in right now, where there's a lot of uncertainty within the cryptocurrency space, especially um, uncertainty on the legacy finance, stock market side, and Federal Reserve and central banks from all around the world are creating policies and formulating things that are very scary if you're on the wrong side of it. So right now, in this time that we're in, wherever you are in the world, please take this video twice over at least when you watch it, okay? And really study what I'm about to show you. I want to take you through some keys that you can use to start yourself off on the right path and why it's so important to have technical analysis skills in 2021. Okay, hope you guys enjoyed this video. Let's get on with it. Okay guys, so in this video, I'm going to make a very simple video, nothing too long. And now we'll use cryptocurrency as a demonstration and for you to have the understanding of what to do in the time that we're in. All right. So what I'm going to do here, I'm using MetaTrader today, okay, to analyze with you guys so you can follow me as I go along. But I want to demonstrate to you why I believe technical analysis is highly important, especially for things like crypto. Now, let me do something here. So I'm going to open up a chart window. I'm going to pull up Bitcoin here. And I'm also going to pull up Ethereum. So I'll pull that up right here too. All right. And I'll pull up one more cryptocurrency. In this case, I'll use Doge. Let's see if we've got Dogecoin here. Do we have Doge? Let's see. Moment of silence. Okay, here we go. Doge is right at the bottom right here. So I'll pull up Doge and put it right here. Okay. All right. Now, for those of you who've been following me extensively on the YouTube channel, you know I've done a lot of technical analysis, very accurate technical analysis on Bitcoin and the price action, even before we had the news happening with many other cryptocurrencies. Now, leaning on that point, to start off with where we are, I'm going to put some notes here so that you guys can copy this down. All right. If anyone knows me, I love to teach with notes. Okay. So you can follow these notes. Now, number one reason now in 2021, why do you need technical analysis? So why do you need to have technical I was just technical chart reading skills? All right. Why? Okay. Now, the biggest reason why is not because you're going to be able to buy at the right price or sell at the right price, because most of you will think about that. The number one reason is to understand the different levels of psychology within, and I need more space for this, within the market that you're in. Okay. And I'm going to explain this by breaking down the truth of, the main markets that most people are invested in. Okay. So let's write this here. So first thing is you want to understand the different psychologies within the market that you're in. Now, why is this important? Now, in each market, the topology is different. That's the best way I can call it, or the best terminology I can use to describe different crypto markets, for example, would be their topology. Same thing for Forex and for stocks. Now, in the financial markets in general, as the whole spectrum, there are different levels of participants. Okay. Now I'm going to write this here. Okay. Participants. Okay. So participants, okay, a group of of people who fit into a financial, and I'm going to put this here, put some more space, bracket of investing and or trading. All right. So when you hear me use the term participants, this is what I mean. So a market participant, for example, we have the main levels that most of us should know. Okay. Now, the most obvious one, okay, is the retail trader. Okay. So retail trader. Okay. Or retail. So retail trader is, I would say, 95% of the people who participate in the markets. All right. So I'll just put 95% of people. Okay. Now, the 95% of people that participate in these markets here, what I would say is when we look at the market participants, this can go for any category here. So whether you're in the Forex market, crypto, whichever ones you are in, this is where you'll be. All right. The next level of participants that we do have is, and I'll type this up for you, is institutional investment or institutional trader. Now, why is this important in 2021? I'll show you. Okay. So the institutional trader, what separates a retail trader and an institutional trader is two things. Number one, amount of money available to trade or invest in. That's one thing. So what separates these guys out? So retail traders, which is most people from in institutional traders, number one, the amount of money available for them to trade in. And number two, okay, second thing, the level of insight information and technology available. Okay. So in whatever market you are in, institutional traders, or I put institutional trader, but it's really with an S, but institutional traders have a lot more money and a lot more insight, information and technology available at a faster speed than the retail trader. Okay, so already between the retail trader to the institutional trader, there's already a big disadvantage for retail traders. Okay, and this is to do with price, the speed at which the price comes on, which is something called latency. All right, and number three, okay, regulation, or I'll just put regulatory laws. Okay, so regulatory laws is another thing that separates institutional traders from retail traders. For example, there are some brokerages where unless you have an institutional license, you don't have access to higher level or higher leverage accounts. Now, for those of you who don't know what leverage is the amount of buying power your money has. So for example, for most retail traders, okay, we do have access to, on certain brokers, 1 to 500, which means for, let's say in dollars, for every $1 you have in your balance, okay, that equals to $500 worth of buying power. Okay, this is how we're able to grow smaller accounts to larger accounts. It's something that you need, and something that institutional, well, not every institutional trader, but many institutions use as leverage. Now, for example, I used to work in a bank for 4 years, 4.5. Now it's a building society, but I consider it a bank anyway. And when I was there, I learned that we have to do training every single time, and I learned that for every 1% that banks or building societies, and this is in the UK, may be different in other countries, but I guess every banking level of institution will behave the same. For every 1% that you get given in your savings, for example, an ISA or whatever, banks make about 2,200%. And for the longest time, I still wasn't too familiar, even though I was a trader at the time. I still wasn't too sure how that's possible. But growing over time, I understood it's because of this powerful word here called leverage, which is the ability to use by credit more to trade with, to earn, and do many other things, which is not important right now. But you can use a small amount of money to command a large amount of effect on your trading account and possibly even on the market too, depending on who you are. Okay, but then there's also regulatory laws that restrict certain things. Okay, but these are the three things that separate these two levels out. Now, the final level here is the governmental level. Now, I don't want to call it governmental trader, but I'll just call it governmental, all right, sponsorship or governmental activity. All right. Now, in between these layers here, we could separate these institutions into different types. So large businesses, Fortune 500 companies, so many different things. But the governmental activity, what separates the institutional trader again, is number one, money available to invest in, because now on the governmental level, they're connected to central banks, so they can print money out of thin air. All right. Now, regulatory laws, there's another term higher than regulatory laws. So regulatory laws, when you hear me use that term, I mean that in the sense of students who, or especially for my students who know, when we talk about regulatory laws, we're talking about companies. But there is another type of law, which is governmental law, or what is called fiscal policy. Okay. Fiscal policy, all right, which is the policy that comes from stuff like the Federal Reserve about how mm, currency and how currency flows, and the interpretation of how credit and different facilities are given to different sectors of people. So this is fiscal policy. All right. And these two things separate out these two levels. And of course, number three, we all know, especially governmental, actually, well, in every government, all right, it will be the level of information. Okay. Level of information, insight, and tech. Okay. Now, usually level two. Now, if you wanted to put three levels on, this is level one, two, and three. Usually level two and level three of participants work together. In some instances, level three is working against level two, but in every instance, these two are always working against the retail trader. So why do you need to have technical skills in 2021? This is the main reason, because these two levels, which have more money, more, they can actually have control over the laws, they create the laws, and they have more insight, information, and tech available than your normal average laptop. No matter who you are around the world, okay, if you're a retail trader, you will never have better technology than an institution or a government, unless you work for them, because they have access to things that may not even be released in 10 years. Now, I'm not being a conspiracy theorist, this is just the truth. For example, in the US, they have DARPA, which is for airplanes, and different warcraft that, are top secret models for things that will be used by the government, uh, governmental's defense team, force, army, 10 years, 15 years from now. Okay. The internet, even though, okay, the internet was formally founded at a certain period of time, I think it was 1988. The internet was being used in the 60s by, intelligence forces that it was already fully working. It was just a smaller uh, circuit, or smaller, a closer amount of computers were working together. So it wasn't so public, it was just private. Okay. So I'm saying that to say that there's always going to be technology far above what your laptop can produce. Or if, for those of you in the UK, if you go to PC World, or in the US, Target, whichever way you go to get computers, it will never be as powerful as the computers that, especially the third level, which is the governmental figures, have. Okay. So why am I saying this? Now, a lot of people say stuff like, oh, I don't need to do technical analysis, I don't need to study, I just want to invest for the long term. Now, if you think like that in 2021, you're going not to make the money that you think you're going to make. Now, just because investing, you big, when you get to the realm of trading and investing, you're going to what I call the level four of making money, which is your money becomes your employee, figuratively speaking. So it wakes up in the morning and goes to sleep for you. You put some money into something, you come back and there's more money. The money went to work for you. Okay. But there is still an aspect that Just because you make the money is not lazy money. And if you don't have any technical analysis skills, then you will get caught out at the wrong time. And like many other people, that happens to them time and time again, will buy at the top. Now, buying at the top simply means buying at the highest price point possible before the price absolutely turns the other way. And throughout history, so many people have done that. Okay. And in every single market, whether it's Forex, crypto, which is my main focus for tonight, everybody always does that. Number one, because they choose not to take the time to learn. And number two is greed. And number three is fear. These are the emotions that govern you. So by this video today, you should be able to understand to a better degree what's going on. So I'm going to put these levels here. So we have level one. Now keep this in mind because I'm shifting gears now. So level one. Okay. Level two. And we have the final level, level three. All right. So all of these levels, keep these in your mind because you're going to need it for when you're investing. Now, I'm targeting really if you're somebody who's investing and or somebody who's never done any technical analysis before and you think you don't need it. I'll show you why you do need it. Okay. So level one, two, three, these are the levels that we have. Now let's have a look at Bitcoin, or I even use Ethereum. Let's start from there. Now, Ethereum is an amazing project, okay, for many different reasons. And this is the chart of Ethereum, okay? Now, I'm not doing any technical analysis. We're just doing the maths here. Now, let's just say, okay, you wanted to invest in Ethereum during this period of time, so around February in the beginning of the year, and you set yourself out that I would like to make some profit. Now, you heard from a friend that Ethereum is going to go up in value, so you go and buy, okay? Now, where you buy, what price you buy, can't be just determined that, oh, it's cheap compared to you. Because if you do what's cheap compared to you, okay, or what most people would think, all right, you're going to get caught in what I call the retail trap. Okay. What is the retail trap? Now, in a market, if you think about a market physically, I'm from Hackney. So for me, I've always grown up going to Dorset Market. Maybe some of you may not know exactly what I'm talking about. Some of you may, if you're from London or from the UK, visited that place. But in a market, there's always going to be a place where you can buy stuff and you can sell stuff. You either sell or you buy or you do both. And it's the same with the financial market. So let's step back a little bit and think of this as a market. Now, there are people or participants, you know, just like you'd go to a normal market, that are trying to get the best price for their goods. And there's also people who are trying to sell their goods at the best price also. Now, price is affected by the balance between the two, which is supply and demand. Okay. So supply means the price should be going downwards. Okay. Because if there's more of something or something's more common, then it has less value. If there's demand and people want that product more, then the price will go upwards. Okay. Just like a normal market, if five people are selling the same product, okay, then compared to if one person is selling a product that is very hard to get, the price will be very different. All right. Now, what is the retail trap? One of the biggest traps is, for example, buying based on what you hear from the news. Okay. So, retail trap, I'm going to put part A is buying based on the news of what people are saying. At the end of the day, what people are saying and what the charts is saying is two different things. If you want to think of it as truth and a fact, okay, or even more black and white, the truth and a lie, what the news is saying about a certain currency based on what they say. So, for example, if we go to 2008, at this highest point here, if you guys can see this, at this period of time, especially for things like Bitcoin, okay, and I'll pull up Bitcoin here for you guys to see the same thing. Now, I'm going to make sure that next time I'm going to pull up the articles from that period of time. But during this period of time and this last spike here, this is the time where everybody was saying buy Bitcoin. All of the news media were agreeing with Bitcoin. Many of the mainstreams were saying, Bitcoin may be a great investment. There was lots of news coming out during the highest point. And if you notice, if you look at the shape of the chart, these periods of time in 2016, 2015, there wasn't really much activity going on with Bitcoin. Okay. But nearing this time right here, which is the highest point of the price, okay, we see that this is where in history, okay, I was around during that time. Now, if you want to do some research, definitely do so. But if you pull up articles from 2017, okay, near the end of quarter four of 2017 into 2018, everybody was saying to buy. If you check back in your emails, I always do these kind of things just to, check back on things. But if you go to your emails and you have a look at what was being said during 2018, I was getting emails every single day. Every single company was offering Bitcoin Bitcoin investment vehicles of every sort, and straight after the price crashed. So at this point, all right, if you're buying Bitcoin, this was a very bad price to buy it at. Okay, if you've never bought any Bitcoin before, why was this a bad point to buy it at? Because you bought at the high point. Now, if I put a line over here, okay, I'm not doing any technical analysis yet. I'm just showing you what the chart is saying. Okay, so right from this high point here, the highest point that we were at with Bitcoin was at 20,000, or let's just call it $20,000. It was a bit lower than that, about almost 20. Some charts read 20, but roughly around about 19,900 to 20,000. All right. Now, if you had bought at this high point, all right, and the price had dropped all the way here, right now, the lowest point of that year was at $3,250 for one Bitcoin, which is fantastic. Now, despite the fact that the price has gone up all the way to 64 at the moment, so the highest we've got to on Bitcoin is 64,000. In reality, if you were to have bought here, you would have lost, and I'm going to calculate this for you. If we take the high point to the low point, now it's easier with MetaTrader. You can just hover over this. So according to this, the highest price here was 19,891. So what I'm going to do here, I'm going to do quick maths. So 19,000, I think 891. Did I get that right? Divided by 3,254. Okay, very simple calculation. All right, let me just double check that I've got this correctly. So 19,008. Okay, I've got that right. So if you do the maths here, so I'm going to quickly grab my phone so that you guys can all see this. 1 second. So 19,891 divided by 3,254. And I'm going to times that by 100. Okay, so we've got the maths here. Now, the price difference here, I'm going to take this away from 100. So do it the other way around, divided by 981. All right, here we go. So I need to flip this the other way around, and my mistake. All right, flip this the other way around. All right. So if you do this division, it's going to give you a decimal point. Now we've got to times it by 100, so I might as well write this over here. And this will give us a percentage, so 16.3%. All right. Now if we take this number right here, if you were to buy at this point right here, now without using technical analysis and just following the news of what you were hearing from people that Bitcoin is a great investment, and you bought somewhere at the top here, let's say you bought at the absolute top. By the time the price got to from the end of 2017 to the end of 2018, in 1 year, your portfolio would have dropped. You would have lost, if we take away this number, or you can put it this way, that your portfolio would have been down to 16.3% of what you originally invested. So in other words, in terms of a loss, I'm going to write this right here. So your loss on your portfolio for that period of time would have been 100% minus 16.3%, which is, I don't need a calculator for this. This is going to be 83, excuse me, 0.7%. All right. So you've lost 83.7% of your money. All right. Now, what else is wrong with this? Now, we can see that Bitcoin finally made its way back above here. And by the time you would have got to this point, all the way to the all-time high, which was 64. So this time, let's say you were a smart person, and as soon as Bitcoin made this high all the way here, this is considering that you didn't close your Bitcoin at all, you just left it alone. And then you come back in 2021 and Bitcoin is at 64,797. All right. So how much would you have gained? Very simple. So these calculations, you can do this for you to have I want this to sober you up. Okay. Some of you watching this may have seen this before, but I want this to sober you up of why technical analysis is so important. Okay. So let's just call this 64797. All right. And we're going to divide that by the all-time high, which was sorry, 19831. Have I got that correct? Yep. Oh, 891. All right. So when we do this, okay, we're going to get a number above 1. All right. So this is how you can calculate your ROI by the number of times you've earned. So if I divide these numbers here, so 9891, I'm doing this on my phone here. So on my phone, I don't know if you can see this. I don't think you can. All right. But according to my phone, you have 3.257% gain. Sorry, for free. Let's just keep it to 2 decimal places for 3.26x. All right. So at the best or at best, all right, you have 3.26x. All right. So in other words, whatever you invested, you have a ROI. Now, if you want it in percentage, you just times it by 100, but 3.26x is the same as saying you gained 326%. Okay. So in other words, if you invested 1,000, so I put a dot, so $1,000 would equal to $3,260. Okay. But if you closed at that point, okay. Now, the truth is that nobody ever times the complete top of the market and nobody really gets the complete bottom. All right. So your percentages may even be worse than this in terms of your loss or your gains if you don't do this correctly. All right. But this is just for you to see the picture of why technical analysis is very important. Okay. So moving forward from where we are, let's take, for example, the lowest point. Now, if you had good technical analysis, all right, the first thing you would want to look at is the market structure here. Now, we had market structure here that would suggest to us that the price should have a pullback somewhere here, okay, which I'm not going to go through at the moment. I'm just going through why you need this, okay. So firstly, let's say that you waited and you didn't follow the news, okay, but you followed what the chart is saying. Now, why would you want to follow the charts? Okay, charts do not lie. All right, I want you to remember that charts do not lie. Why don't they lie? Okay, because whatever money is within the market or within the asset that you're looking at that you can see in the chart cannot change. Now, how the price represents itself may change, and this is where advanced technical analysis comes in, which is not really important right now. But in terms of the market structure, the bullish candles and the bearish candles, the buying candles and the selling candles, if you can understand the market structure, then you would understand that whatever's going on in the news does not correlate with the chart. If the news and the charts correlate together, okay, especially in when you have a very strong movement like this, then you should be doing the opposite. So when everybody's buying, you should be selling, okay? And if you follow that principle, you should be down here. So let's have a look at this now. So if you decided to use chart analytics, so the first foundation is, all right, market structure. All right. Now this market structure comes in 4 waves, okay? And I believe that this is really good. If you know this already, it's a good refresher to remember always, no matter what you're trading. Don't let the price coax you into taking a trade that you're not supposed to. Now, we all make mistakes, of course, okay? Or you all make mistakes with investing at the wrong time, okay? Now, investing is still trading, guys. Now, some people try to debate with me and say that, oh, no, they're not trading, they're investing. You are investment. Anytime you put your money into a system, you're trading that currency into an asset. For example, if I'm investing in Bitcoin and I go to coinbase.com and I say I'm going to buy some Bitcoin, I've just made a trade. I've traded my currency, maybe for example for me pounds, into Bitcoin. And when I take the money back out for me to take my profit, I'm going to make another trade from Bitcoin back into pounds. So you are trading. And secondly, for those of you who say that I'm purely an investor, not a trader, I hear what you're saying, but if you're investing in this chart, you've actually placed a buy here. You're just trading in slow motion. It just means that you close at a lot later time than a normal trader. I usually, when we think of a trader, we think of someone who's behind the charts every day, buying and selling. But investors are just doing the same exact thing in slow motion. So either way you put it, you would need technical analysis to invest in the right way. The same way as a trader, I wouldn't want to buy at the highest point and sell at the lowest point. I want to be selling at the highest point and buying at the lowest point so I can actually make some profit. Same thing with investing. You don't want to be buying or investing your capital, okay, and then being in a term what we call drawdown for a very long period of time. Now, if we think about this before I move on to here, let's think about this. If you were to invest right at the top here and you bought some Bitcoin right here, you would have to wait. Now each line on MetaTrader, I'm on the weekly time frame, so one line to the other represents 1 week's worth of trading, or excuse me, 1 year worth of trading. So these candles are 52. So from the time you bought up here, you would have to wait 1, 2, 3, 4 years almost, okay, before you saw any real gains on your profit. Whereas if you bought at this low point with very simple technical analysis, you would have, by the time you got into the next year, or you would have waited for the right buying point, by the time you got to the end of next year, you could even have time to save, because this is 2017. You could have had a whole year to save money waiting for that moment to buy right here. And you would have bought from here. And as soon as the next year comes along, you'll be in profit for that whole year, still be in profit back down here, or break even, an absolutely amazing profit at the same point right here. Okay, and that only took you 2 years. So if anybody has told you that, oh, you don't need any technical analysis, just invest, please run away. Okay, make sure you have technical analysis. Okay, because with simple technical analysis, you can not only earn more money quickly, you can also save yourself from the emotional pressure of watching your portfolio being down for a long time. I have friends who have bought Ripple right at the all-time high of $2.16 and have put, grands inside, but they're still in a loss. Even when Ripple got back to very high levels of price action, close to the all-time high, they're still not even anywhere near break even just yet. So, and that was what, 4 years ago. So I'm saying this to say you do need to have technical analysis. So what can we start with as a foundation today? All right, first thing you need for your analysis, this is a refresher. Please take this on. Whenever there's a movement in the market, the price is either going in 3 directions. There's 2 directional types of trends. Okay, so when the price is moving in a certain direction, we call that a trend. So we can have a buying trend where the price tends to go to the upwards, or the price of something or an asset increases. And then we have the other side, which is the bearish side, or which is where the price is going downwards in a succession of downwards movements. Okay, so we have, and we mark these movement points here, all right, as A, B, C, and D. Okay, so A, B, C, and D. Now, if you're looking at this chart right here, we could correlate this. Now, we know the price is clearly going upwards. So if we start from the lowest point, okay, which we call a swing, we could pick a point. Now, you don't even have to be the greatest technical analyst. Let's just start from this year. If we took this as the bottom, all right, I'm not being, highly technical right now, just using geometry right here. If we go right here where this is the high and this is our B point, all right, now according to market structure, all right, whenever there's an A to B movement or bullish run, there's going to be what we call a pullback or a retracement. And the reason for that is very simple. When the price gets to a high point, there will be sellers or people selling to take profit out, especially in a market like Bitcoin, or okay, institutions take money out and change direction, okay, and different things of that nature. So this will be the A, here's the B, and we're looking for the C. So if you looked at this market and you saw this price spiking up, no matter how far the price had been driven up, we know the price will have to come back down at one point or another. Okay, so for this first lesson, if you just simply use this now, now I'm not saying you're perfect, even if the price dropped down here and you bought it, it's a lot better than buying right at the top. Okay, so first principle is that if you want to save yourself from FOMO, always remember market structure. If the price is doing a crazy movement going upwards, at one point or another, there will be a reason why the price will pull back down again. And that's just how human beings are. There's going to be people who sell at the highest point and push the price down, and there's going to be people who buy at the highest point. And on a more higher level, on a more complex level, institutions and governmental figures would like to take money away from you. Now, how is that? When there's news and there's a B point, okay, and they keep pumping news and excitement, is to get the average retail trader, which is an investor, okay, to go and buy at the highest point. Because when you buy, they're going to sell and they make money off of your excitement and lack of knowledge. Okay, so this is why technical analysis is very important to have, even if it's just a basic level. All right, so now we see a C point here, and we see the price has kind of gone down here. Now, any of these could have been C. This could have been a C. This could have been a C. Okay, but let's say that you were just waiting and you got in at first here. All right, cool. You bought here. The price has kind of stayed level for many months. Hasn't really moved. Then it dropped a bit. you would say, okay, then the price has pulled back almost to where A is. So what should we do? I should be buying again. Very, very simple. And what would be your expectation? Sooner or later, the price is going to go above this point and give me D, which happens to be right up here. All right. So this is the market structure that we have now. From this highest point, again, if you've been following my videos, you would have known what I've said about the price selling off. So we've had a C. Now, what is the second rule here? As a reminder, whenever we have a complete cycle, so A, B, C, and D, all right, C, so I'm going to put this here, whenever there is a complete cycle of price, we restart, okay? So what does restart mean? Very simply, for us to restart, I'm going to, C becomes A. So I'm going to put this right here for you guys, all right? So C becomes A, all right? And then our D point becomes our new B. So our D point becomes the new point. Now, as an investor, what would that mean? That's the price you don't want to buy at. That's the top, all right? So in other words, we can call B the top. And this is in a bullish scenario, not in a bearish one. We can do bearish scenarios next week. So B is the high point. High point, this is bad for buying, okay? Bad for buying. Whether you're investing or trading, you don't want to be buying at the high point. You want to be buying at the low point, okay? And so C, all right, is going to be the low point, which is good for buying. So good for buying, all right? So good for buying, bad for buying. So we want to look for these C's because this is where the magic happens, all right? Now, what would have happened? Let's do some maths here. So this is the maths, all right? And I'm going to put this on top of here. Buying at the high, okay? I'll put in brackets B. So what would happen if we bought at the low point? So what if we bought at the right place, which is down here, buying at the low? What would happen if we have bought there? So let's do a quick calculation here. So first of all, if we got the absolute lowest price, so that was 3,200. Let's put this here. All right. So I'm going to load this up. All right. So all right, here we go. So if we put this here and I put 3,254 and the all-time high was something like 64,000. So let's put this here. We had an all-time high of 64. Let's drag this up so we can see. Yeah, 64,797. So let me do the maths here. So how much more would you have gained? So don't get me wrong. If you had invested at the high point, if you had strong guts, you would have had to wait 4 years to make 3.2 times your money. Now, if you had waited just for the lower point here, let's do the calculation. So 64,797 divided by 3,254. Okay. All right. So 3,254, according to this, you will make 19.9% return. So we can almost call it 20 times your money. All right. Now, we can't call it 20 times because it's not 20 times, but it's very close to. So in other words, the amount of money you would have made in terms of your gains, if you had just waited for the C point with just basic technical analysis, would be 1,990 here. Put this percent here. Yeah. 1,990%. All right, so almost 20 times your gains. Okay, which means for the same 1,000 that you invested into Bitcoin right here at this highest point, so 1,000 would give you a grand total, all right, of $19,900. Okay, or pounds or Canadian dollars, it could be anything. All right. So this is the difference between having technical analysis and not having technical analysis. Okay. So to finish this off, we have our rules here. So now that we have a C point, here is A. All right. And up here we have a B point right here. All right. So our expectations is very simple. Now, for those of you who've ever been confused as to why we have markings on the chart, it's just an extrapolation for the future as to where we believe the price is going to be. All right. So we could use here as A, here is B. So we should expect the price to come back down here. And then from that point again, we should be buying. Now, of course, we could be more technical and look at levels and different things like that, but that's not really important. But I just wanted to get over to you a very simple lesson why you need technical analysis. Okay. Now I'm going to finish this off. Okay. With just looking at two more things. So we have the retail trader trap. Okay. That's number one, what people are saying. Okay. Okay, this is buying what people are buying. Okay, at, all right. And this is more important, and this is the biggest key because right now it seems as though we are in a crypto bear market. Okay, and this is the most important one why you need to have technical analysis. Selling when people are selling or bad news comes out. So when bad news comes out, for example, there's a lot of things going on with Binance right now. And this is an important one, especially if you haven't seen already. There are scams going on right now, people trying to steal people's money, posing to be Binance. So if you're getting strange texts and emails, don't go to anywhere apart from Binance.com, guys. That's the only place you should log into. Don't put your details in any email, any text, none of that at all. The only thing Binance will only ever give you would be a verification code for withdrawing or doing some sort of transaction. That's it. Okay. So we'll stick into this. This is the retail trader trap. To buy at the wrong time, in other words, buying when what people are buying, which is the worst thing you can do, and selling when people are selling. Why? All right. Now remember what I said about level 2 and level 3. I'm gonna keep this as a very short and sweet statement. And then we can continue next week. Level 2 and level 2 and level 3, excuse me, participants. I'm just gonna call them participants for short. All right. Do the opposite of retail. Let's see if I can get. Okay. So always remember this. If you don't remember anything else, level 2 and level 3 participants, or partips for short, do the opposite of retail trading, investing activities. And this goes as far for those of you who use robots too. Even if you trade with a robot or an investment robot that does it for you, they still have algorithmic processes to, in other words, work against you. All right. So what do we do from here? So now, okay, I'm going to show you this example in what we have now. Speaking in more recent times, we know that we've had a so-called crash on the market. The price has dropped massively. Now, what's one thing you can do with crypto to help you? Okay, I'm going to give you this as well. Number one, before I continue with what I'm about to say, okay, always look at what the future vision is of a crypto project. Okay. Number two, second thing you want to look at, and this will help you to understand, is what are the current achievements Number three, and this is to help you when you're looking at cryptocurrency projects, for me to help you to understand this. Number three, what does the CEO, founder, CTOs, all right, CTOs and CFOs believe about, and this is very important, what they believe about crypto, not just about their project, okay? Because your project can just be a business idea, but what they believe about crypto, because crypto is an adoption of a new era of technology, okay, which is going to change the lives just the same way internet has changed, you know, for my age, my life, because I grew up, I was born just, I guess, at the when the internet was really taking root. I was born in 94. Okay, so uh I was born when you couldn't use the phone. You can either choose to use the phone or use the internet because it was dial-up connection. And if you try to use the phone, you can hear some very strange noises on the other end. Okay, and you couldn't make a phone call until we got to the point of Wi-Fi, public Wi-Fi, fiber optics, Ethernet, and all of those things. Okay, so this is the three things that you want to look at for when it comes to a crypto project. Now, why do I say this? Because during this hard period of time, you do need technical analysis. If you've never bought crypto before, okay, it's not good enough for you to know the news that, okay, things are not so great right now. All right. But you also would want to definitely make sure that you look into the projects from these perspectives, because these will help you for the future of what you need to do. Okay. So if I put this out here for you guys, all right. So let's look at Ethereum. Now, Ethereum has an all-time high before this so-called crash happens at around 4,300. But to make this to double check what's going on, all right, this is the all-time high is 4,367. All right. Now I'm going to explain to you something here. Now there are some crypto projects that are important, all right, for you to understand where they are, where they're at, and what's going on in a time like this. Okay. Now at the lowest point so far as to where it's dropped to, okay, since this spike or this drop has happened from the spike to the drop, is down about here, which is about 1,700 on the dot. So let's put this here. So what am I doing right now? I'm calculating how much percentage lost or how much percentage is lost if you had bought at the top here, okay, which is a simple calculation, times by 100. So we divide that, that will give us the percentage that is left. And we take that away from 100%, okay? So if I do the maths quickly for you, so 4,367 divided by 1,700, okay, times by 100, 1,700, 4,367. Sorry, so 1,700, sorry, divided by 4,367 times by 100. Okay, we take it away from 100. That gives us 61%. So far, we've seen it. If you had bought right at the top, you would have lost 61% of your value here. All right. This is for Ethereum. Now I'm going to compare this to another project. Okay. Why am I doing this? You'll see in a moment. So Ethereum's loss from what we call the all-time high, ATH for short. Okay. Now, if I go to Dogecoin, all right. Now I'm going to have to open up another chart of Doge because I've done a lot of writing on here. So let's open up another one. Here we go. Here's a Doge for us. So from Doge's movement here, from the highest point it was at, the highest point it was at right here, according to MetaTrader, is 74 cents, roughly. So 74,146. All right. So the highest point was 74,146. And let's do the lowest point. The lowest point it's been at so far is 0.16403. So what we're going to do is 0.16403 403, I believe. If I got that wrong, you can get me on that. So 0.74146. Now, this is not final. I'm just going to double check one more time just to make sure I got that right. So the low is 403. And then the high is, 146. All right, so these are in dollars. So let me put the dollar signs on. Now, what am I doing here? All I'm doing is calculating how much loss has occurred since the market has crashed from the point it has. So again, I'm going to do the same thing here. And if we do this calculation here, so 0.16403 divided by 0.74146, all right, times that by 100, and then we take away 100 from that, and we get 77.8%. So during the same period of time, okay, Dogecoin has lost 77.8% of its value, which is massive. Now, what's the difference between these projects? Now, one of the projects, which is Dogecoin, okay, started out as a meme and has continued to follow through as a meme. Now, there isn't hardly any as much economic incentive or value for growth on this project compared to Ethereum. Now, Ethereum, okay, and we'll go into more detail about them later on, these projects. Ethereum has almost about, let's say, 60 to 70% of all of the cryptocurrencies, or what we call level 2, so things built on top of Ethereum, okay, are run on Ethereum. Many of the well-known projects that we know of, and if you don't know of any, it's okay, but many well-known projects like things like Matic, also called Polygon, okay, well, that's the new rebranding. Things like Aave and different cryptocurrency DeFi projects, decentralized finance projects. So a lot of them are built on Ethereum. Okay, so Ethereum has a lot of value in the cryptocurrency community. All right, and if we look at the future vision of what Ethereum is trying to do, and I'm going to leave that for you guys to decide, compared to what the future vision of Dogecoin has to provide, we find that they're completely different. Okay, now when we look at the price here, we've had massive movements on both. Okay, but one of the on Ethereum, the price action was caused, this movement that we've seen up here, by value being added to the system because of updates. For those of you who are more savvy with crypto, EIP 1159, the London update, and things of that nature. So there's been value added to this system, to this project, that's caused the price over time to grow because there's been more interest in this project. Now, how would you be able to tell projects that are more secure than others when we have a crash? That's why I like to call the crashes or the drops in price, stock drops in price, the shaking ground, because it shakes out the weak cryptos and brings forth the ones that really have true value and future potential and longevity. For example, in this case, Ethereum, we see the drop is a lot less than we do see in Dogecoin. Okay, and the reason is because most of the ratio of who is invested in Dogecoin is mainly almost 99% retail. Okay, whereas with Ethereum, the figures are much different. We have, yes, we do have still a large amount of retail traders involved, because in this market of crypto, the topology is retail traders got involved in crypto first, institutions came in after. And so by default, retail traders have, a large, in terms of number, not necessarily money, but a large population, or a large group size in terms of investing in crypto. Okay. On top of that, okay, for example, Ethereum has been put forward for ETFs, whereas Dogecoin has no such thing. Okay. And this is because whenever you see institutions get involved in something, it's very different from when retail traders tell you to get involved in something else, or you do what they're doing. If there's high institutional interest over a certain asset, that means that it truly is definitely going to be an asset of the future that has potential. Now, I'll leave you with this thought. Dogecoin, roughly about four out of all of the people who hold Dogecoin roughly have about 70% or 80% of all of the Dogecoin supply. Okay, and the rest is spread across the world with everybody else. Now, in terms of the economics, I think that's a lot more like a large dictatorship than a democracy. Now, the ethos of crypto is for there to be decentralized, fairness, trustless, a trustless system, but we don't have that. Okay, so to leave you with final notes here, all right, for those of you who follow me with trading, this is why we want to trade Dogecoin short, but rather when we get the drop on the, the next drop that we're expecting, we'll be buying Ethereum, but trading Dogecoin down. We wouldn't be trading Ethereum short. Okay, now that was part one. Okay, I'll continue into part two. I hope you guys enjoyed that. Stay tuned for the next video. All right, make sure you like, subscribe. Now, if you can't wait till next week and you really want to get some technical analytics skills going, if you follow the link below this description, there is a link for a course that I created myself called the Mastermind course. It's a 4-part course. Okay. And in that course, I go through the foundational things you need to be able to read price action and be able to protect yourself from getting into cryptocurrencies that potentially, will drop, or for you buying right at the top instead of buying at the bottom. Okay. If that's you and you definitely want to have something like that, definitely check the link below. And if you want to get some of the trades that we take and grab some of the trades on time accurately to make some profit from, you can follow our Patreon down in the description below. Okay, the WGA Wealthyverse. Okay, and there'll be lots of opportunity to be able to make some great gains. Okay, so I hope you guys enjoyed this video. Make sure you share this with your friend, like, subscribe, and I'll catch you guys later. Take care.